Thank you, Savannah, and good morning, everyone. Appreciate you taking time this morning to visit with us. Again, thanks for joining the USDA Farm Service Agency and Michigan Department of Natural Resources in this live Teams event this morning, where we're going to discuss the Pandemic Assistance for Timber Harvesters and Haulers program. Again, as Savannah indicated, my name is Dave Russ. I am the Acting State Executive Director for Michigan's Farm Service Agency, and we'll be joining you this morning for a few minutes. We've got a number of resources online available to you that we'll introduce in just a moment. And as we get started and throughout the webinar, we would encourage you to ask questions and submit questions through the Q&A function in the Teams event functionality. And we look forward to hearing from you throughout this morning's event. As you can see, we've got a number of resources that we are bringing to bear this morning to visit with you about the Pandemic Assistance for Timber Harvesters and Haulers program, including Brenda Haskell from Michigan DNR. Forest Specialist Dale Allen is one of Farm Service Agency's program chiefs here in our East Lansing office. And then Savannah Hollow, who you just heard from a moment ago, is our outreach coordinator who helped kind of organize and put this morning together. So glad everyone is able to join us this morning. And again, thank you for taking some time. We're going to talk about a number of different areas today, spend about 60 minutes working our way through this. We'll talk about PATHH. Again, if you're familiar with the federal government, we like our acronyms, and like many things that we do here at FSA, we've assigned an acronym to this program, which is a little bit easier than trying to get out the entire mouthful of the Pandemic Assistance for Timber Harvesters and Haulers. We refer to it in the acronym as PATHH. Dale will walk us through some terms and eligibility requirements of the program this morning. We'll talk about the application process, how the formula is calculated by law, go through a couple examples, and then finish the morning ensuring that you've got the resources that you need to carry on and take advantage of this program as designed and passed by Congress. So start with some basic foundational information in terms of authorization and how FSA and how we have arrived at this point. So the PATHH program is authorized by Congress, of course, signed by the President, and has become law through the Consolidated Appropriations Act of 2021. The law provides the Secretary of Agriculture up to $200 million to be made available under this specific program. Again, it is designed to target and provide relief for timber harvesters and haulers that have been directly impacted by the COVID-19 pandemic. Some of the basic provisions just up front in terms of eligibility would require at least a 10% loss in gross revenue between 2020 and 2019 over a specific period of time. Again, we'll talk about this a bit as we move on. But again, the periods of time in which will be very important to think about is January 1st of 2020 through December 1st of 2020, and then compare that with January 1st of 2019 through December 1st of 2019. It is important to remember that is about an 11-month window. It is not a full calendar year. That is the way the law is written, and that is how, of course, FSA is implementing the program. This program, the PATHH program, is a bit unique, and to FSA, timber harvesters and haulers are not typically the customers that FSA works with. However, we are quite pleased to be able to provide these services to this expanded group of customers through this PATHH program. As you may know, Farm Service Agency typically works to provide price support, disaster assistance, loans, and other conservation programs to landowners, farmers, and ranchers throughout Michigan, and then of course throughout the United States as well. So this program and the customers that come to us through this program is a bit unique to us. But as we engage with you, we would encourage you to engage with your USDA service centers throughout the state. The Farm Service Agency service centers throughout the state are a great resource, and I would encourage you to continue to engage with those staff, get acquainted with FSA, what programs we may have available that can assist you as you go about your work. It's also important to recognize that USDA has a number of partners and a number of sister agencies. The Natural Resources and Conservation Service may be a great resource for you as well in terms of providing some resources, some cost share as it relates to forest management plans and some of those other sorts of things that may be useful and helpful to you as a business moving forward. So with that, as I said, this is a bit of a unique program to work with, but as part of that, we're often pleased to engage with additional partners, just as we've done today. And one of those partners is, of course, the Michigan Department of Natural Resources, and we're pleased to have Brenda Haskell with us this morning to help us and provide some resources as well as we move forward and implement this program. So with that, again, welcome. I encourage you to use the chat, the Q&A function this morning as you have questions about the program. And with that, I'll toss it to Brenda to address some issues from the DNR perspective. So again, welcome everyone, and Brenda, thank you for your time.
Good morning, and thank you for that introduction. Good morning, everyone. My name is Brenda Haskell, and I'm one of the forest specialists for the Michigan Department of Natural Resources, Forest Resources Division. I work in the utilization and marketing program area. Most of my specific job is doing a lot of outreach and communications and work with our sawmill sector on the small sawmill side and the loggers across the state, including log truck drivers, foresters, timber harvesters of all types from the middle of the state all the way across the Upper Peninsula. My contact information is there on the screen. If you ever need me, just feel free to reach out. You could call, text, email, whichever way works best for you, and I'll get back to you as soon as I can. And just very grateful to be teaming up on this project and hoping to provide as much relief aid as possible and connection as we can get for the loggers impacted by the COVID-19 pandemic. With that, I'll turn it back over. I'm not sure who's next.
Very good. Thank you, Brenda. Appreciate it. Yeah, I think
You're
Dale
welcome.
Allen, one of our program chiefs, who's been assigned to administer and oversee the program. And so with that, Dale, take it away. Thanks for your time.
Thanks, Dave. Appreciate it. Good morning, everybody. Again, yeah, thanks for joining us. I actually started my career about 35 years ago in Iron Mountain, so I certainly have an understanding of your industry, certainly an appreciation for it. So again, thanks for joining us this morning, and now we want to get into the meat of this opportunity and try to address as many questions as we can. So again, thanks for joining us. So before we discuss eligibility, though, we want to go into a few key terms that you're going to hear repeatedly throughout this morning's session. So we'd like to quickly review those before we dig into the program specifics. So the question is, what exactly is considered a timber harvesting business? It's a business also known as a logging business with its gross revenue derived from one or more of the following: cutting timber, cutting and transporting timber, or producing wood chips on forest land. Processing of wood on site on the forest land qualifies as an eligible activity and can include chipping, grinding, converting to biochar, cutting to smaller lengths, etc. The qualifying characteristic of the processing is that it must be done on site on the forest land prior to transporting off site. So that is a key component of this program. There is a note: the business must be classified under a NACE code of either 484220 or 484230 for tax purposes. and have filed IRS Form 2290 specifically for logging vehicles for both 2019 and 2020. This form is key for us to assess eligibility for timber hauling applicants. If a business is not classified under NACE code, either of those two NACE codes, we do have the ability to review other documentation that you may be able to provide to determine that you're otherwise eligible. So we do have a listing of primary and secondary documentation that the county offices may ask if you do not actually file under those two NACE codes. Primary documentation is such things as showing detailed timber harvesting equipment or ownership of log hauling trucks, bank loan or mortgages, leases, insurance coverage. For loggers and haulers, who may work for federal lands, federal land documentation may be provided. This might include contracts, scale tickets, insurance, or safety inspection documents. If you work with the state on private lands, you may have some documentation as well that could demonstrate you truly are in one of these eligible businesses. The county offices may ask for some secondary documentation. Again, work with them if you do not operate under those two NACE codes, and we can actually work around that in many situations. So again, the timber hauling business means a business known as log hauling business with its gross revenue derived from transporting products harvested again from the forest land with vehicles registered as highway motor vehicles used in the transportation of timber. And so, as I indicated earlier, we're looking at two specific NACE codes, but we do have the ability to work around those with certain documentations that you may be able to provide. Again, timber is not lumber. Timber is not a post-processed product for purposes of this program. Timber, again, our trees or logs harvested from forest land. It includes trees or logs that have been minimally processed on site in the forest before transportation from the forest land. Gross revenue and gross receipts. This is an important concept with the PATH. So we want to expand a bit more on gross revenue. For this is where we have received quite a few questions, and there appears to be a bit of confusion. So like many businesses, logging harvesters and haulers definitely were affected by the pandemic. Some of you may have pursued and received Payment Protection Program loans, PPP loans. Those do not count in terms of gross income. So those are not included in gross revenue as we define it for this program. Not sure how typical it is that loggers and harvesters receive unemployment benefits, but if for some reason you did qualify and you received those are included in this gross revenue. Stumpage is another question that comes up frequently. As we understand it, again, stumpage is the right to harvest. So this is more of an expense. Once the harvest occurs, then obviously that becomes part of the gross revenue, but stumpage itself is not included in gross revenue. Another question that comes up relates to how folks may file their taxes. So, an individual may have a timber harvesting or hauling business, but they may also then file jointly with a spouse who may have outside income. And if that's the case, the spouse's income outside of the business is not considered gross revenue for purposes of this program. There are others that actually have an employee number, an entity that the hauling or harvester works under. Kind of the same scenario. If they have a Schedule C that they use and they file jointly with a spouse who has income outside of the business, that income is outside of the business is separated and not considered part of the gross revenue. So again, gross revenue is important. You'll get a better sense as we talk about the actual application process versus gross receipts, which are the total amounts the timber harvesting business or timber hauling business received from timber harvesting and timber hauling activities without subtracting any costs or expenses. So again, we're not going to include the sale of physical assets such as machinery or equipment when calculating gross revenue. So hopefully that helps clarify some of the questions we've received to date in trying to sort out what counts towards gross revenue. So now we want to get a bit into, again, the principal codes, those 6-digit numbers that classify the main type of product a business sells or service offered. You guys are familiar with these NAICS codes. They were formed back in 2017 under the North American Industry Classification System. As you folks know, it's a standard used by federal statistical agencies in classifying businesses, establishments for the purpose of collecting, analyzing, and publishing statistical data related to the U.S. business economy. So again, most of you folks are familiar with it. That's the background to it. If you're not operating under those numbers, again, as I mentioned earlier, we do have a means of accepting some primary and some secondary documentation on a case-by-case basis to demonstrate that you truly are an eligible applicant. So let's get into the eligibility. So we've already defined harvesters and haulers, but let's recap again. To be eligible for this program, individual or entities must be in operation as a harvester or hauler. Again, harvesters are the loggers. You folks perform the initial harvesting and transport of trees from the ultimate processing into forest products, the process of cutting, processing, and moving trees, including skidding, on-site processing, and loading of trees on log trucks or rail cars. Haulers, again, are the log truck drivers. You folks then take that product from the forest to the processing facility. So either of these are required to have been in operation in 2020 and 2019. So that's important. As Dave indicated, we're looking at specific windows of time, comparing gross revenue in 2019 on the window described to 2020. An important note here again, timber operations that experience normal seasonal fluctuations during the applicable time periods will be considered an operation during the entire applicable PATH period. And again, there's a reference to the NAICS codes that are required. Again, please note the periods in 2019 and 2020 are not quite a full calendar year. That was defined in the statute. So those are the defined periods that we're looking at that are captured in the application process. It's important that the business must have 50% or more of its gross revenue derived from timber harvesting, timber hauling, or both. It's recognized that a business may have other income sources outside of that, but you have to be able to demonstrate or self-certify that at least 50% of your income comes from harvesting or hauling timber. To be eligible, you have to be a citizen of the United States, a resident alien, which for PATH purposes means a lawful alien is defined in an FSA handbook 5PL. That's referencing a policy manual that we use to define and determine certain categories of eligibility. Partnership of U.S. or resident aliens of the United States, a corporation, a limited liability company, or other organizational structure organized under state law and solely owned by U.S. citizens or resident aliens, or an Indian tribe or tribal organization. And as a note, applicants are required to provide the name and taxpayer identification number of each person or legal entity that holds an ownership interest, members of a business, so to speak, again, in accordance to that policy. Administrative offsets do not apply. So what that means is that if an individual who's applying owed a debt to the U.S. government, typically if that's the case, we would offset the PATH monies to settle that debt. Congress recognized the need for these monies to flow to businesses affected by the pandemic, and so that does not apply under this program. Bankruptcy does not exclude an applicant from applying for the 2020 PATH benefits, and PATH benefits will be in dollars and cents. Ineligible applicants, any person who is not a citizen of the U.S. or a lawful alien, any legal entity or loan joint operation with a member of any level of ownership who is not a citizen of the U.S. or a lawful alien, and then any person or legal entity that fails to provide names and a tax identification number. So again, that's important that information be provided from an entity standpoint. And minor children are not eligible for a payment under PATH. So let's get into the actual application process after we look a little bit further in ineligible applicants. Again, residential or commercial tree care, arborist, tree expert, etc., that they're not eligible for PATH. Landscape services, timber brokers are not eligible for PATH. Trucking businesses that do not transport trees or logs, and then United States federal, state, or local governments, including public schools, as defined again in FSA policy, are not eligible to apply under this effort. Again, the monies are designed for the actual timber harvesters and haulers affected by the pandemic. It is recognized that some folks serve as timber brokers as a component of their business, and again, that speaks back to that 50% of an income of a business, though, has to be from hauling and harvesting timber. So as we talk about applying for PATH, there are a number of forms on the screen here. And so it can seem a little daunting, particularly to somebody that hasn't worked with the USDA service centers in the past. But the sign up actually is fairly easy. And don't let this screen deter you from going in and getting acquainted with that local staff and certainly applying for the program. If you've dealt with the service center in the past, some of these forms may already be on file. So the AD 2047, as it describes, is a customer data worksheet. So that basically provides us with all the information we need to put you into the system. A CCC 901, if it's applicable, is necessary. It is applicable if you are an entity. That's where we gather the various members and their ID numbers. The AD 1026 refers to highly erodible land and wetland compliance. Many of you folks, if you do not have agricultural interest outside of your business, it's simply checking a box and signing your name to that form. The SF 3881 is the direct deposit form. So we do everything electronically. If you qualify, your payments then would be directed into the bank account of your choice. And then what's important here, though, is the FSA 1118. So that's the actual PATH application that we'll go into much more detail. We've talked about the IRS 2290, the heavy highway vehicle use tax return for 2019 and 2020 for timber haulers. That's an important piece of documentation. And then again, those principal business codes are a requirement unless you can demonstrate, again, through primary and secondary documentation without those codes. So don't let this screen deter you from applying. It's really fairly painless. And again, our staff will work you through the entire process. The other thing I will say is that within the USDA, within the federal government, any information that you provide is private and it is not shared outside of the USDA. It's only gathered for purposes of determining eligibility and for making payments. And so we can assure you the information that you provided is kept confidential and private as it must be. So again, the process applying for PATH, the importance again of submitting that IRS 2290 form for 2019 and 2020 for logging vehicles. There is a link here if you're not familiar with that form. and where to locate it. There is an exception. If a timber hauling business is only operating on tribal land, the Form 2290 is not required. So this is the actual application itself. And so we wanted to take a look at it, some of the specific entries that you would be providing, and then the various parts of this particular form. So in this case, the applicant's going to complete Part B. That can be completed in various ways, which we'll talk about in a minute. Part C for timber harvest hauler revenue, and then Part D is the timber harvester hauler certification before signing and dating the application under Part D. So again, this is a self-certification process. So Part B, Part C, and Part D are the important aspects of this form. And it is a fairly straightforward and simple form in comparison to some of our other programs. So Part B is simply the applicant's name and address. So we want to look a little closer at Part C. So this is where the applicant will start providing essential application information. Again, as an applicant, you should provide the principal business code listed on their tax return. Again, we're referring to the NACE code. If the applicant does not have a code on their tax return, this is where the applicant would put NA, it's not applicable, and then provide justification, again, that primary, secondary documentation that I referenced earlier. And again, the local service center, they can work you through that to help you determine what type of primary and secondary documentation that you may have. Under Part C, again, the applicant is required to certify timber harvested hauling gross revenue received for the respective 11-month period. The 2019 and 2020 gross revenue, again, will be recorded in column 8 and 9 respectively. The applicant may certify revenue as a harvester, hauler, or both. For applicants whose business either originated in 2019 or possibly dissolved in 2020, the applicant must report the amount of time they were in business during each of the eligible program periods on their application. And then again, applicants certify the date of business origination or dissolution, and item 10 or 11 of the application is applicable. The date will be used to prorate the payment calculation. Again, details on how it applies will be shown later in this webinar as we get into some examples. The application process, again, you as an applicant are required to certify timber harvested or hauling gross revenue received for the respective 11-month periods as we've defined before. Again, and then certification is subject to spot check. So remember, gross receipts are defined as the total amounts the timber harvesting business or timber hauling business received from timber harvesting or timber hauling activities without subtracting any cost or expenses. Again, do not include sale of physical assets such as machinery or equipment when calculating the gross revenue. Again, this is a self-certification process with a number selected for spot check after sign up. So it's important that applicants retain revenue documents for at least 3 years, and again, may be asked to provide documentation by our county committee, which is actually a function of our agency. There is an elected body that oversees the office and oversees the submission, review, and approval of these types of benefits. The application process, again, a review of the fine print outlined in Part A of the application states that the applicant is agreeing to comply with the program provisions and eligibilities. They're agreeing to comply with the rules as published in the Notice of Funds Availability, referred to as a NOFA. They meet the definition of a timber harvester or hauling business with 50% or more of their gross revenue from timber harvesting or hauling. Their revenue declined by 10% or more between 2020 and 2019. They'll complete the necessary forms as applicable. We'll provide additional information to support their certification should it be requested, and will submit documents timely within 60 days of the application submission date. So again, that's all contained in the small print. By checking the boxes and signing the FSA 1118 Part D, the applicant again is certifying that all members, if a joint operation or legal entity, are U.S. citizens or legal aliens, or a tribal entity or organization, have provided the necessary forms. They're certifying that all information is true and correct to the best of their knowledge, and are not an ineligible applicant, meaning residential or commercial tree care services, landscape services, trucking businesses not hauling logs, timber, a timber broker, or a federal, state, or local government, nor a minor. So remember, only individuals can register again for a level 2. We'll talk about what that means. So there's several ways that a person can submit an application. Probably the best, in my opinion, is in person. As Dave indicated, we have service centers across the state, USDA service centers. Those folks can answer your questions, guide you through the process, and guide you through the application. You can also go to a site, www.farmers.gov, listed below. You can actually print out an application, complete the application, and mail it. As a reminder, it must be postmarked by October 15th, 2021. And then it can be submitted electronically. Again, recognizing you folks are busy out there, and sometimes it may be convenient to electronically to submit an application. So they can be faxed, scanned, or emailed with a signed AD 3117. You can go to the website that we referenced and do an online application, or you can use the box or OneSpan technology to submit an application. If you're not familiar, again, with the USDA service centers, in person may be your best option. The e-auth I mentioned is a process that we go through to provide folks access to officially submit an online application. At this point, though, only individuals can do that if you're thinking of going that route. If you're an entity, you have to choose one of the other 2 options that we discussed. So applicants, again, are required to file all eligibility documents within 60 calendar days from the date of signing the form. Anybody that fails to provide those, basically, it may result in a reduced payment, or we may not be able to approve the application. So again, the deadline is about a month away. You know, we want to make sure that we can speed this process up. As we talk about payments, you know, we're encouraging people to actually apply sooner than later. If we have a rush at the end, that may delay the final payments in terms of being issued. So disapprovals. Our county committee, they'll disapprove an FSA 1118 if any of the following occur. Program eligibility requirements are not met. Person or legal entity applying for PATH is determined not to be eligible. Signature requirements were not met according to, again, our internal policy. So it's important, particularly for entities, that if their entity papers describe a certain individual that has the legal right to sign on behalf of the other members, that needs to be provided to the local office. We have power of attorney forms that could be used for that same purpose. It's important that you know, you work with the local staff again to determine what signature requirements may be applicable to your operation. And the applicant, if they intentionally misrepresent their total gross revenue, again, that would be means for disapproval or potentially for you know, refund of monies if subject to spot check. So we want to talk a little bit about payment limitations and the payment formula. So there are some limitations that Congress put in place. A total payment that any individual business can receive under PATH is $125,000. There is an exception. Indian tribes or tribal organizations are not subject to that cap. Payments are going to be calculated, again, looking at gross revenue from that 2019 period minus the 2020 period, multiplied by a factor of 80%. There's going to be an initial payment made And I should mention the 80% is a payment factor and is part of the calculation, as you'll see in a minute. It's not the program factor that might be applied at the end of the program if the amount of gross revenue loss is higher than the program funding total. And again, we'll talk more about that, but it does sometimes come up. What is this 80% factor? And it's basically an agency factor that's designed to try to spread this money out as far as we can to interested applicants. So there is going to be an initial payment. It'll be made as applications are approved and all eligibility forms are processed. So there's a motivation to get in sooner than later, because again, as soon as you are eligible and your application is approved, we'll be making that initial payment. The final payment will be issued again if the applicant is eligible after the application period ends, and we'll talk more about what that means. The payment calculation again, so there, as Dave mentioned up front, there is a $200 million limit of funding that Congress provided for PATHH. So that's the dollar amount that we're working within. So if the total calculated final payments nationally in combination with those initial payments exceed this $200 million limit, the final payment amounts may be factored or the maximum payment limitation of $125,000 may be reduced to stay within this available funding. So that's unknown at this time, but as soon as we get through the sign up and we are able to reflect all eligible applications in the software, we'll know what that final number is. So the initial payment, again, as I mentioned, we're going to issue that and it's going to be equal to the lesser of, again, the gross revenue for the period of 2019 compared to minus 2020 multiplied by that factor of 80% or $2,000 again, so whatever is less. So again, the initial payment of $2,000 exactly or less, there will be no final payment or reduction applied. So if that's what you're calculated to receive based on this calculation, you would not anticipate a final payment. We know that $2,000 is not a lot of money in a business setting, but it is, again, an initial payment with the potential up to $125,000 minus the initial payment if qualified. So again, the final payment is going to be determined after the close of the application period. That's when we're going to issue those final payments. This payment is going to be equal to, again, the 2019 gross revenue minus the 2020 gross revenue multiplied by that factor, and then minus any initial payment received by an applicant. For operations that originated in 2019 or maybe dissolved in 2020, that applicant must report the date their business either originated or dissolved during the eligible period on the form. From there, the software will calculate and then prorate the payment. So again, we're going to adjust the gross revenue proportionally for the purpose of the payment calculation in either of those two situations. We do want to go through some examples. Again, we thought this might be helpful to give you a scenario on how the payment formula works. For the first example, it's a business that was in operation for all of 2019 through 2020. So this is Timber Business N, created in 1987, still in operation today. The gross revenue, as we defined it for the business, was a little over $600,000 in 2019. And in 2020, they earned $235,000. Again, this business, doing the rough math, had a gross revenue loss of 61%. And remember, the trigger for the program is 10%. So doing the math, you can see the math. In this case, the individual going through the formula had a loss of $292,336. So that would entitle them to an initial payment of the full $2,000. The final payment, again, is that formula amount of $292,336 minus the initial payment, which would be $290,336. But remember, there is a payment limit that Congress put in place of $125,000. So in this example, using the $125,000 payment limit minus the $2,000 initial payment received, this example, assuming that enough of the $200 million is available at the end of the sign up, would receive a final payment of $123,000. The second example, again, is a business that has been in operation for all of 2019 through 2020. This is Timber Business L, created way back in 1943, still in operation today. Gross revenue for the business in 2019 was $5,672 compared to $4,389 in 2020. So representing a loss in revenue in 2020 compared to 2019 of 23%. So doing the math, using those numbers, multiplying it by the factor of 80%, it indicates this operation lost $1,026.40. So in this case, that's less than the initial maximum payment of $2,000. So the payout amount would be that loss calculation of $1,026.40. And again, there will be no payment beyond the initial payment doing the math in this particular example. Example 3 is of a seasonal timber business. So again, in this example, we have a logging business that was in business for the entire year of 2019 and the entire year of 2020. They were unable to complete any timber harvesting or hauling due to the mud season in the month of March of 2019, as well as during part of February and March of 2020. They certified gross revenue in 2019 of $300,000. Gross revenue in 2020 of $150,000. Again, doing the math, the business had a gross revenue loss of 50%. Because the business was seasonal, but in existence during all of 2019 and 2020, the gross revenue for each year does not need to be adjusted due to the seasonality. The business, again, in this case, should certify items 8 and 9 in Part C of the FSA 1118 using the full revenue for each year. And again, doing the math in this example, using those numbers and applying the 80% factor, it indicates a lost revenue of $120,000. They would be eligible again for the $2,000 initial payment and with a potential final payment of $120,000 minus the initial $2,000 of $118,000. The last example, example 4, is a business that dissolved in 2020. And unfortunately, because of the pandemic, amongst all of the different industries, including timber haulers and harvesters, there was some businesses that dissolved in 2020. And so this example is one, Timber Business B, started back in 1978. Due to the pandemic, the business dissolved on August 23rd, 2020. The gross revenue for the business in 2019, which was in operation for the entire 335-day PATHH period in 2019. Remember, it's 11 months we're looking at, not 12, was $500,000. The gross revenue in 2020 for that PATHH period was for 236 days from January 1st, again, through August 23rd. The revenue was $100,000. So in this case, the business has a gross revenue loss of 72%. Looking at the math, again, using those numbers and applying that 80% factor, they had a loss of $286,101.70. In this case, they would be eligible for that, the lesser of the payment, so they would be eligible for the full $2,000 initial payment. The payment factor here would come into play, and in this case, they would be eligible for $123,000 for a final payment. So again, those are some examples that cover some of the common scenarios. Hopefully that helps you get a better understanding based on your circumstances how the payments may be calculated. So with that, Savannah, back to you.
Thank you, Dale. All right, well, that is the PATHH program in a nutshell in 45 minutes. If you're interested in signing up for PATHH, timbermen need to contact their local Farm Service Agency service center. In Michigan, we have 49 service centers across the state, as you can see here by the blue pins. We're ready to serve you. An office locator is available at www.offices.usda.gov, or you can call the number here, the 877-508-8364, to be patched through to the nearest service center near you. No English? No problem. FSA offers language interpretation services for those more comfortable receiving service in another language. Producers need to identify their language to the Farm Service Agency employee, and then we will work to coordinate for a linguist to do the translations. Then also, if you're a partner organization out there and you need additional outreach resources, feel free to send me an email at savannah.hollow@usda.gov, and we will hook you up. And then for the convenience of folks joining us today or viewing the recording, here is a list of FSA service centers in Michigan with the addresses and phone numbers. And you can actually drop off an application at any of these service centers and they will assist you. So thank you for joining us. I don't see any questions in the live Q&A. So for all those listening, both live and recorded, we wish you a safe and productive year. Thank you.